oh, you want some money from after we just had dinner and we want to go and just split the bill? What's your tag? Boom, send. It doesn't matter that your wallet is a neobank that's on Plasma or mine is a neobank that's on One Money or Tempo. It should just work.
I think those are the companies where you can think that there is a broad market where there's a lot of horizontal room and a lot of these different players. We could see a lot of winners in that part of this stablecoin stack.
And then how that pertains to this barbell thesis, I think that would be a really, really good closing point as far as this investor outlook on how to think about the stack. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, Stabled Up episode 16. Welcome back to our premier weekly stablecoin show powered by our friends at Frax with their FRX USD product, FraxNet, and a lot more coming from our latest conversation with their co-founder, Sam, with their Genius compliant stablecoin. We've got Chuk, the man, the myth. Some have called him the LinkedIn warrior, the Fintech financier, and the master of terminology. Sir, good to have you, man.
It's awesome to be here. Thanks for having me.
Absolutely. Chuck, I think you saw we released the Neo Finance market map. And as you know, this is a thesis that we're extremely excited about. We believe that the legacy financial system requires an upgrade. And frankly, crypto native infrastructure slop has been getting too much VC dollars and has been persistent for too long. We believe this deserves an upgrade as well. And they don't just need an upgrade. We actually believe that they're going to upgrade to the same point. And that is this convergence point. It's neobank, it's fintech 2.0, and this is what we're calling neo finance. And so, Chuck, I mean, maybe you could just give us your first reaction to the thesis, because we value your opinion. We want to hear from knowledgeable people in the space like you on whether or not we're thinking about this the right way. So, first impressions on neo finance.
Yeah, I mean, I think it's absolutely right. It's what a lot of us have been waiting for. And like no qualms about, degen, and we've all done it. We trade, we have fun. But when you think about the evolution of blockchain and what it can do, you're thinking about replatforming the financial system. And the convergence of TradFi and DeFi is this constant battle. And we're making a ton of progress. 2025 was a kind of a excellent year for that. Obviously, a lot of that has to do with regulation and then certain big signals with acquisitions. But the infrastructure has been built out and folks have continued to build it out over the last several years. And so with infra on-off ramps, with liquidity, as that's all coming together, you're starting to get really, really good consumer applications and business and infra. And so, I think it's bang on. And we're just at the beginning of what will be like a multi-year evolution of finance. So it's exciting to see.
Yeah, man. And we just had Sid on from Maple, and Rob and I have just continued to understand that this specific category is a set of highly capitalized teams as well as skilled operators at the helm, which is a core difference from some of the, let's say, earlier crypto teams that we've seen, as well as a core difference from traditional just legacy finance team. It's the combination of expertise between the fintech, which you possess, and the Web3 space that is really kind of creating this value in this architecture. We want to really take this time to educate and learn ourselves from you as well as our audience. And I think the best way to kind of start is just to think about this from an investor point of view. Chuck, we've been thinking a lot about how value is going to be created in this category. Where does value accrue is often the question that investors want to know. And so when we think about this category at large, to put it simply, Chuck, who's making the most amount of money? Where's the best business models? Who's doing it well? And how are you thinking about the actual on-chain business models and off-chain business models of this category? Let's start here broad, and then let's get into some of the specifics on the market map.
Yeah, absolutely. This is the question on everyone's minds. It's $1 billion question. Some might say it's $1 trillion question. And as you are seeing infra proliferate, you're seeing apps proliferate, you're seeing, barriers to entry have decreased in certain areas of the stack. but network effects and switching costs and licenses and other combinations of those things are going to start to enable folks to accrue value. So let's start with, I guess, when you think about the full stack from applications on one end all the way to bare metal on the other side, and then there's various ranges of infrastructure in between, and many of them use each other. Over time, I think value accrues to either of those sides and less in the middle. What I mean by that is end user applications, whether that be retail consumers or SMBs or enterprise, they have the interface of that customer, and they can continue to add value with bundled products and continue to expand there. And that becomes a very sticky relationship. They often are where the brand sits, the brand value, and depending on the particular product, there can be network effects. Flip all the way to the other side, where in certain areas of infrastructure stack, yes, licenses aren't impossible to get, but they're not easy to get either. And so the right set of licenses, being able to plug into the bare metal, so having a master account at the Fed or close to it, having the right combination of owning the kind of the full stack down to the various different real like fiat rails in the particular regions that you want to participate in, that starts to build up strong reliability and low cost. Uh, is that alone enough for a strong value accrual? Maybe not, but a combination of using that infrastructure to then win large enterprises, the large payment players, the large PSPs, and then continuing to add additional products. So not only do you on-off ramps, you then start adding cards, card issuance, you do orchestration, and so on. Then you're keeping them together with switching costs. And so I think that's the way I think about value accrual. Own the end user, add multiple, and this is the playbook you've seen Revolut and Stripe and others. You start with one product, one wedge, and you continue to expand. And then at the far end, really going down to the metal, and then hopefully also being able to build either liquidity advantages or also bundling.
Makes a ton of sense. Now, Chuk, let's apply this framework to the market map. Let's pull it up and give us a sense of which categories, which companies on this map are further towards the bare metal and further towards the distribution and the consumer app. If you've got it in front of you, give us a sense, where does the bare metal fall? And then, where's the other end of the barbell? And then we'll talk maybe about, which one to focus on.
Right. So I'll start on the application side. I think you've got the new players and the existing players. And I think the existing players, the Revoluts of the world who are entering the stablecoin space with their applications, Stripe, obviously, they've entered with acquisitions. They were in the market beforehand through infrastructure partners, and then they entered it with more force with acquisitions as well. And then, folks like PayPal and so on who already have existing customers, networks, and so on. Then you have the newer end user applications, the casts of the world, the Aviciis, and so on, and they are still in the early stages. They're still unproven, but they're growing very rapidly. They're showing product market fit. Their revenues are crossing from tens of millions into eventually hundreds in the next year or so. And the test of, can you build a sticky consumer app, we're going to watch it in real time. So I'll start there, and then on the other side. Okay, go ahead.
I hear most of those companies are falling into the fintech and the neobank categories, are primarily consumer facing and currently owning customer relations.
That's right. That's right.
One end of the barbell. Cool. Okay, and the other end of the barbell is bare metal, as you were saying.
Yes, and this one is not one. The promise of stablecoins, particularly for cross-border payments, has been one that has been talked about for the last year or so. Cross-border payments are structurally broken in terms of how different countries manage their, central bank and monetary systems. They don't talk to each other. Fantastic. That's a great area for a unified rail and unified liquidity and 24/7 rails to make a difference. But there are lots of existing players, the Airwallex of the world, the Wises of the world, who figured out workarounds. And so when thinking about who is going to enable the infrastructure to enable cross-border payments to be really, really efficient and fast, it's how do you build to the rails in as many countries as possible for your customers. And if you look across the kind of the major infrastructure players who are enabling this, you've got Bridge, BVNK, Conduit, MoonPay now with their acquisition of Iron, Hi-Fi, and so on. They each have a different, call it menu of integrations to the rail. And so no one really has a full to the metal setup in, call it 10 or 15 countries. But that's being built right now. And as they acquire customers, they'll acquire them on a stablecoin issuance product, and then do orchestration, or acquire them on card. Like if you're Rain, you acquire your customers through a card product, and then add orchestration on top. And so the battle isn't won, but this is the kind of the bare metal end that I'm talking about.
Got it.
Yeah, and then just
so
to put this all together then, Chuck, yesterday you kind of laid out this 3-part stack, right? And so if you could just tie that 3-part stack that you laid in as far as the smart contract layer, I believe it was like the issuer layer, and then one other, and then how that pertains to this barbell thesis, I think that would be a really, really good closing point as far as this investor outlook on how to think about the stack.
And so yesterday we were looking at the map and passing out the players, and you look at the stablecoin issuance section, and there's a lot of folks in there, and they all do a range of different things. And it's because you have folks who only one part of the stack, and folks who do the entire stack. So let's talk about the stack. At the end of the day, you are tokenizing some assets. It just so happens that for stablecoins, they're highly liquid, typically treasuries and cash. And therefore, you have a fairly easy way to maintain the peg. Okay, I'm skipping over a lot of detail, but at the bottom of the stack, you have reserve management. Okay, and then you represent those reserves as a token or something on a blockchain across different blockchains. That's the smart contract layer. And then beyond the smart contract layer is then the end token that people see. You can call it the application layer, you can call it many different things, but let's take Circle for example. Circle manage their own reserves, or they use a BlackRock, a managed fund for reserves. They manage their smart contracts, and the USDC is a Circle branded stablecoin. That is an entire stack. Then you can look at Paxos, where Paxos is a white label stablecoin issuer. They do their own stablecoins, but the one I'm going to talk about right now is PYUSD. So Paxos manages the reserves. Paxos also manages the smart contract, but the stablecoin is branded with PYUSD. So that's another different set of combinations for the stack. And then you can think about M0 as a protocol. So M0 is kind of like the smart contract layer. And I'm simplifying for those who really know the details, but M0 is the smart contract layer, and they work with different reserve managers to issue this middle layer token called M. And then brands can come and issue their own token from M. So they've separated it out into a modular way. And therefore you have like folks like Noble and MetaMask USD who are built on top of M. And so when you look at the announcements that are happening, say Western Union issuing a stablecoin, working with Anchorage, or Klarna are issuing Klarna USD, working with Bridge, it's hard to say, okay, who's the issuer, who owns the smart contract, who owns the reserve. You look it through their stack and you see how it splits. But I think what's clear is that the technology to issue is not challenging. It's not that hard. The reserve management takes some scale, but it's becoming easier and easier, and that will eventually be commoditized. And so the value gets pushed to the brand, the stablecoin itself. As a brand, as PayPal, as Klarna, as Western Union, as any kind of fintech or any platform, do you have distribution? Do you either have captive audiences, captive customers? If you're a marketplace, do you manage the processing of money in between your customers? Do you have influence over potentially your suppliers or your vendors? Do you have your own blockchain where you can invite developers to create applications? This is, for example, Robinhood and Coinbase with Base. So the distribution layer is where value accrues, and it really comes down to how much leverage and how much influence they have on their customers. And essentially, when issuing a stablecoin becomes really easy, it used to take months. Now it takes days, and with Braille and others, it takes seconds. You can just go on the platform, click a couple of buttons, and before you know it, you've got a stablecoin. the effort, the value, the complexity moves to distribution. And so I think that's where the battle will be won.
Yep.
And at the end of the day, you don't need, if you own a walled garden, you don't necessarily need to compete with other people's stablecoins. It's just an extra tool for you to grow another revenue item, get a greater share of wallet. And I'm sure we'll talk about it today, but everybody wants to build a super app. If you have users, how do you monetize those users? And blockchain technology is another way of enabling folks to do that. It's essentially doing for finance what cloud and open source did for software.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Yeah, man. I mean, couple quick points. One, the USDH Hyperliquid event showed clearly that issuers have this desperate need for distribution. It was almost off-putting how crazy these issuers went for Hyperliquid's distribution. It was almost scary. Two, on that note, this is also Tether's profitability led to so many teams wanting to just, Tether and Circle wanting to be an issuer. Because there's just this massive opportunity. So this kind of led to an oversaturation that you've mentioned, which then if you look at the stack, you get down to reserve management and the application layer, and you start to think, oh, there's more value in that part of the stack now than there is just in the pure issuers stack. Now that's a broad take, and there's still tons of value to be captured by Tether, Circle, and the likes of Sky and others in that top tier of issuers. But it seems like if you're not in that top tier of issuers, rates coming down, competition going up, we'll see where the Clarity Act lands. There's value to be had in those other parts of the stack. Rob.
Yeah, I'll build on top of that, because I think when we're thinking about value accrual, it's really forward looking is what we're concerned with. And so the market for issuance and the market for reserve management has largely been won. And so I think there is room to grow those businesses that are the winners, but I'm not investing in the long tail of stablecoin issuers, nor the long tail of reserve management for these stablecoins. I do think there is a breadth in the market for the distribution and the apps, these companies that may launch stablecoins. And I think you can cherry pick a long tail of winners. Could be all the way to the Walmarts of the world and the major retailers that do have some major distribution. I think those are the companies where you can think that there is a broad market where there's a lot of horizontal room and a lot of these different players. We could see a lot of winners in that part of this stablecoin stack. But you might not see a long list of winners in the other two parts, but you will still see Circle, Tether, and the reserve managers that are already leading the space continue to lead those segments of the stablecoin market.
You agree with that, Chuck, or no?
I'll build on that, and I agree. I think Circle and Tether are in a different place, just by timing and path dependency. The fact that Tether can make so much money, people don't understand it, and then they think, oh, I can do the same thing. And it's a function of how they got started, who holds the token, and what their alternative is. And if it is avoiding or escaping volatile currency, volatile economies, capital controls, or unscrupulous behavior, the list is long. But it's very hard to unseat Tether in that world. And now their liquidity, the network effects, the distribution is hard to overcome. Circle is really dominant in DeFi. They're running many exchanges. The partnership with Coinbase has led to huge amounts of distribution. Circle have an incredible on-off ramp network across the world. The partnerships with banks. Again, that's another thing that they're built up over time. Very, very hard to challenge. Now, will the USDGs of the world, the PYUSDs of the world, the other kind of major stablecoins be able to tackle this? Never say never, but you're going up against network effects. Now, for the folks who are issuing, branded stablecoins for their own networks, I think Klarna has a sufficient ecosystem that, as I mentioned earlier, you're monetizing your existing distribution. It's always going to make sense. Now, will that grow outside of their ecosystem? Maybe not, probably not, but that doesn't matter. they've already won. They've already managed to be more efficient within their existing ecosystem, develop much faster, create new financial applications, and their average revenue per user, their ARPU, is increasing. And so it's a complicated answer, but as a investor, I'm looking at companies who have network effects, who have captive audiences, and saying, okay, well, what if they increase the ARPU from, what by 20%, by 30%, not because they issued a stablecoin, but because they added lending, they added trading, they added all these other financial services. So I think of stablecoins as infrastructure. It's embedded finance. I guess is a way to kind of tie it back to existing fintech. Uber, any marketplace, Airbnb, folks who have strong brands, strong network effects, you're now essentially saying, okay, what if I became a bank? What if I lent? What if I enabled cross-border payments? All that's becoming possible. Expanding to different countries is now possible. And so if you take it one level beyond the issuance stack itself and see, okay, what will this company do now that they can expand globally rapidly and launch new financial products easily? Okay, well, it's how good can they leverage their distribution to increase like the ARPU for each user?
I think these are all great examples, Chuck. I think Klarna, Amazon, Netflix, Airbnb, Uber, all of these guys there's a broad swath of brands out there with distribution that could launch stable coins and enhance their ARPU and therefore enhance their business. I want to turn maybe to the other side of the stack, talk about reserve management for a little bit, because this is where the lines start to blur between what is a stable coin, what is RWA, and we have this whole tokenization part of the map. And my understanding is that a lot of these, when we talk about reserve management, where does the interest come from? Well, it is yield on treasuries, and sometimes those treasuries are tokenized, or it's yield on BIDL, and these other RWA style products that ultimately feeds into the stablecoin stack. So give us a sense of the reserve management landscape as it relates to the current stablecoin dynamics. How deep does that go in RWAs, and maybe help untangle some of this web for us?
Right. And so if we think about the reserve management of a stablecoin issuer, you've got a couple of things to manage. You've got, from a steady state of reserves, how much are you deploying into treasuries, into repurchase agreements, repos? How much cash do you maintain so that you can move them around? Okay, what banks are you using? What banks are you? How much redundancy do you have? Do you have banks in multiple locations in order to enable folks to on-off ramp in multiple locations? How do you manage the liquidity between those? And so maintaining the peg is less about matching your reserves one-to-one and whether you can support the redemption and minting demand. And so it's all a liquidity problem. And so the liquidity problems really end up happening on the weekends, because that's when you can't sell your treasuries. And so the evolution of reserve management is going to go to tokenized reserves. I think every issuer, you want to have a 24/7 treasury management system. And BIDL were first out the gate. No, so that's not right. They weren't first out the gate. They were definitely loudest, and a great name for a product. But that's the beginnings of a kind of institutional backed asset that can be used across issuers. Fidelity have one. State Street, JP Morgan announced one as well. And so I think before there was the skill of managing your reserves and the 24/7 nature and make multiple bank accounts, and then that cash level so that you can do quick redemption management, that does require skill. Over time, that will become more programmable. But you need the laws to update so that folks can start to use tokenized treasuries. Genius does allow that, but we've got to wait for rulemaking. And so if you once you start to see that, the reserve, like the investing in yield part of reserve management, becomes easier and potentially more standardized. But the cash management piece, that's an issue by issuer game. And that's still very challenging if you want to be able to move from, issuing, hundreds of thousands or millions for retail applications to $100 million redemptions, $1 billion redemptions.
Yeah.
And that's the scale that one needs to be. That's where Circle, Tether, Paxos are when having to deal with like BUSD, for example. You need to have that kind of infrastructure. And so I think that's still an area where issuers and reserve managers, given that we broke up the stack earlier, can differentiate and say, hey guys, we're well capitalized. We have great banking relationships. We have credit lines with banks. So if you want to issue 100 million in 5 minutes and less, I got you. Like that is a differentiation. But you can imagine that is important for an enterprise customer and less important if you're managing a kind of consumer neobank.
Yeah, and I could easily see how anything like a 1010 or a flash crash or a even FOMO inducing of events where an institution wants to or needs to redeem can cause these issues, and you want to have the reserve management company that you're working with or service to be apt, and so you can start to see how the settlement times of legacy finance are now a moat for different teams, those who are able to kind of capitalize on that, which, as you said, for the neobank, for the fintechs, for me, moving $10,000 from here to there, maybe not a big deal, but for, BlackRock, who's trying to, move money on weekends if needed, or as you say, issue very, very quickly large sums, this kind of elevates when you're like the importance of these aspects elevates in terms of their customer needs. Last thing on reserves before we kind of move into the super app and the neobanks is when you're thinking about the importance of actually having reserve management be verticalized, right? So like sticking with one provider who's trusted. And I think, you can kind of walk us through who those are and what they do specifically versus like having a multifaceted reserve management approach, meaning having business lines with multiple of these. How do you think about the best way for these, or what's the best way that you've seen some of these teams utilize reserve management teams to get the best liquidity preferences for their institutional clients, et cetera? What's the kind of strategy here? Is it multifaceted? Is it just one trusted? How verticalized is it? Kind of give us a bit of detail there.
The jury's still out there because not that many stablecoins have really scaled. And when I say stablecoins, I don't mean, like for example, Athena is obviously scaled, but it's a different strategy. And so, outside of, I think PYUSD is 3-4 billion, USDG is like 2 billion. Obviously, Circle and Tether are huge. RLUSD is about $1 billion. USD1 is $2 billion. So there's only so many that have got to that stage, but it's not necessarily just the size and the scale. It's redemptions and minting volume, which not everybody reports on. And so if you're connected to an exchange, it's really when the stress that happens that really tests how quickly people can get in and out of your stablecoin. And so there is no kind of right answer right now. All we can say is, so far, if you look at history, we've only seen the verticalized players get tested, and all of them have worked out so far. Now, that's not to say that the new models won't work. I think I'm personally very excited to see the M0 model work. And for those who don't know, M0 enables multiple reserve managers who want to manage their reserves in their own way to then mint the M token, and then applications can mint their own stablecoin on the M token. So that will enable different reserve approaches. And as that grows and scales, we'll see how that has benefits, and we'll see what the limitations are. But I think that is a way to improve liquidity and enable specialized reserve managers to compete at that layer. One thing we haven't discussed, but is important as we talk about the proliferation of stablecoins, is interoperability. And so you have interoperability between any stablecoin that's issued by the same issuer. Great. Then you've got to figure out interoperability between stablecoins from different issuers. And there are firms who are out there who are working to solve that problem. But it's one that folks need to think about. And particularly if you're an investor, you may see, okay, if I believe stablecoins are going to grow and proliferate, what's the role of orchestration and clearing and settlement across different stablecoins? There's probably a potential opportunity there.
I'd imagine that interoperability of stablecoins that are issued on the same chain becomes much easier, right? And if we have a world where Tether is, proliferating across all chains, maybe, Plasma is one home of Tether, and then we have ARC is maybe the home of USDC. Is the interoperability question as simple as solving interoperability between these two chains say Arc and Plasma, or are there deeper levels as you get into the reserves and redemptions that stretch? It's not just blockchain composability that we're looking for. We're looking for something that's much deeper into the financial underpinnings of these two issuing companies.
Right. Yeah. It's the second. It's deeper, and it's cross-chain, cross-asset, and there are firms who do this. If you know any 2 points, any 2 stablecoins across any different blockchain, there will be someone who will offer you a price. There are protocols that do this as well, and it's all about size, speed, essentially liquidity, and that's still not quite solved yet. And I think for stablecoins to really be money, there's a concept of singleness of money. You want to be able to have a dollar and it's a dollar everywhere, especially if the credit risk of the issuer is all essentially the same. They're all genius regulated. It should be a dollar. I think people are thinking about how do we really make it neobanks mainstream? How do you get neofinance to be mainstream? These all need to be abstracted away. And so the experience for the end user needs to just be, well, I've got some dollar-like thing in my wallet. I went to spend it. It's spent. Oh, you want some money from after we just had dinner and we want to go and split the bill? What's your tag? Boom, send. Doesn't matter that your wallet is a neobank that's on Plasma or mine is a neobank that's on One Money or Tempo. It should just work. Now, actually making that work in the background with all the things that you mentioned and the reserves and the different levels of the stack of stablecoin issuers and so on is not going to be easy, but this is the world we live in and we will have to solve it.
Yeah, man. No, I think that's a really good example because it is like this payment processing, payment networking flow, blockchain flow, asset issuance flow. Goes all the way down to ERC20s versus the TIP for Tempo, I think, or TIP20 or something. There's token standards. It's very deep. And again, probably an edge for the reserve managers, probably an edge for the applications if you can figure this out, if you can solve this problem. Let's talk about the applications. We'll get the market map up again. We separated fintech and neobanks specifically, kind of operating under the lens of these more licensed, regulatory compliant, custodial fintech giants with large distribution, Revolut, Venmo, Cash App, and the likes, and then crypto native neobanks, more non-custodial, more kind of crypto, spend your crypto with a Visa card, earn, spend, save, kind of all in one app, but with a more, let's say, new feeling, a not so, established brand. What it feels like, Chuck, is that they're both fighting the same fight. How do I provide the best financial experience for my customers at scale, get the most customers, offer them the best product suite in a very safe and sustainable manner? Kind of, I'm thinking about this as a shift in the personal finance habits of people, meaning that I think that people will, especially our age, will start to shift in how they manage money, how they view money. Talk to us about the fintech super app quest that it seems like everyone is on as it pertains to the crypto native neobanks. It almost seem like it's kind of a David and Goliath here. Talk to us about how this works.
Yeah, it's the holy grail, right? I think the super app idea of, okay, where is the place where you home all of your finance? And we mentioned, earn, spend, and send, like transfer. But part of earn is saving, and then part of earn is also trading. And so, I think Robbie Peterson from Dragonfly wrote like an article, you should all go read it, the Fat Wallet Thesis, like last year. And it's still true. That was talking about wallets at the kind of crypto layer. And we've seen MetaMask and Phantom generate an incredible amount of revenue from swap fees, connecting folks to Hyperliquid. So you've got a wallet interface and you connect it to DeFi and a lot of other things in the back. That's the kind of thing that is possible and easier to do on chain. And so you start with, yes, earn, send, and send and transfer. You add in trading, you add in lending and borrowing and DeFi. And so the magic, the opportunity of creating this financial hub, we haven't seen it yet, but someone will nail AI personal financial management, AI financial advisor. I think I saw it actually on one of these apps. It's all happening. And because the blockchain and stablecoins and DeFi and this open source element I mentioned earlier is reducing the cost to build these things, it just blows open the competitive landscape. It's fantastic. And so if you're Revolut, you're like, okay, well, we're in the business of continuing to bundle amazing products onto our users. And now you've got to compete not only with Monzo and not only with like N26, but all these new neobanks that are finding all these niches with customers. And I say that because when I say niches with customers, all the products are going to converge to the same thing eventually. And so
Right.
what combination of those products do you use to go after what set of users? That's the game. And privacy is coming in as well. Some users will prefer privacy. So if you put privacy at the top of your roadmap and put hyperliquid trading at the back, you're going to get certain types of users versus somebody who puts hyperliquid trading first. And so it's going to be an interesting competitive landscape to watch, but the market is massive.
Yeah,
It's
man.
huge.
It's
And so everyone's
huge.
going to just find their own positioning and say, okay, well, I'm the app for this type of person who looks like this, and I'm the app for this kind of person, and they're all going to grow to like millions of users and still be small. And so excited to watch it, yeah, expect convergence in certain areas, but until we get there, folks have to figure out their own branding, their own positioning, and it's a user acquisition game, really, at the beginning.
Yeah, man. It is. And we had such a good podcast with Electric Capital, Ovid Shalgarg, and Mike from EtherFi, just speaking about how their entire strategy is simply to capture the crypto wealthy. Like they don't even care if they have 10,000 customers compared to Revolut's 1 million, because if their average spend is 100x what Revolut's is, they could care less. If Bitcoin's going to 1 million, they just want these customers for the next 10 years, because these are the next millionaires, multimillionaires, six-figure, et cetera, spenders. And I mean, we can get all bulled up all we want, but it's just like, that is exactly what you're saying. And so it's like the edge in the application game, in the application part of the stack, to kind of tie this all together as we come to a close here, seems to be more relevant as far as your specific customer acquisition strategy. As you say, everyone's going to have a lending app. Everyone's going to have stablecoin yield. Everyone's going to have payments. Everyone's going to have some AI personal assistant. All these apps are converging on a very similar user experience as well as look. I mean, look, they all have different brand colors. That's what it's going to come down to. Is like, one is purple, pink, green, blue, and yellow, but they all offer you kind of the same thing. But these teams have to make strategic brand decisions and strategic go-to-market customer acquisition decisions with regards to a very specific niche. I think you raise a great point. Guys, maybe close us out here. Chuck, Rob, been an absolutely great stabled up episode. Chuck, we'll go to you. Closing thoughts on Neo Finance, on the market map. Thanks for being a part of this. And yeah, it's been a great show.
Yeah, closing thoughts. I think it echoes a lot of the excitement of everyone in the space. It's finally happening. This convergence of TradFi and DeFi. There's a real potential to build some very, very useful, but also exciting and innovative financial products. And so now is the best time to build. If you're not building, there's many folks who are in traditional finance in really good jobs who are considering it. Now is the time. I can't think, if you are looking for a moment, it's now.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to kalshi.com to trade today.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today. My only closing thought is I'm particularly excited for when Tesla, NVIDIA, Grok all launch their financial super apps, because they have the best AI, and that is going to make our finances that much better too. So I think that's probably at least a half to a decade away, but we'll see whether or not they're able
Anthropic acquired CoinGecko. It may be sooner than you think.
Yeah.
Wait, did they really? Or was that, is that confirmed?
I'm not sure if it's confirmed. I saw enough detail that I'm like, okay, it seems to be going through, but let's wait until the official story.
That's where we're headed. That's where
we are headed there.
Anthropic stablecoin coming out anytime now. Chuck, man,
we can't let these AI companies get control of the financial world too, man. This is getting out of hand.
Just accept it. They're going to control everything. Chuck, man, fantastic episode. Thank you so much for coming on, and for all of your assistance on the market map. We'd love to do it again sometime.
Cheers, man.
Great to be here. Thanks for having me. See ya.
We'll see you.
All right. Bada bing, bada boom. We've got Jacqueline Melanik up next, the founder of Token Relations. We are going to talk about her journey in the DC landscape the last week and what she's seeing on the tokenization side of things as it pertains to Neo Finance. So excited to have Jackie on.
Do a quick commercial break, and then we'll have Jackie on the show.
Yeah, great Frax segment. Thanks, guys.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.